Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Welcome to the Wyoming Women Business Center's webinar series. Today our topic is how to start a business, or as I put on the screen, so you want to start a business. For those of you who are new to our organization or unfamiliar, we are a statewide nonprofit entity. We offer business counseling to any business within the state of Wyoming or those who are interested in starting a business. This includes help with financial projections, help with business planning in advance, or once you're in business, helping with finances, helping with marketing strategies, whatever your needs may be. So we are here to help and try to help businesses be as successful in Wyoming as they can be. This broadcast or this is being recorded, and once we're done, we will upload this to our YouTube channel, so that if you have to step away from the computer or need to leave for some reason, you can go back and watch the program again to pick up on anything you might have missed or to review anything that you see in this program. At the end, I will give you my contact information, and if you would like a copy of the slides or need additional follow-up, you can reach me through either email or phone call. If you wish to view this YouTube channel, you just go to YouTube, type in Wyoming Women's Business Center, and there is a number of webinars from previous years and from this year, along with this one. You can view at your convenience. We have everyone muted to minimize background noise. If you have a question, please post them in the question or the chat sections. My colleague Christine Langley, also a counselor here at the Women's Business Center, will be monitoring those and passing them on to me. When we get to the end of the broadcast, and we get to a question screen, then we would ask you to click on raise your hand, and we can unmute you if you'd like to ask a question direct. So you can either save them to the end or put them in the chat or question boxes during the presentation. There we go. The services of the Wyoming Women's Business Center are made possible through grants from the U.S. Small Business Administration and the Wyoming Business Council. We've also previously received grants from the USDA Rural Development. So we want to acknowledge those partners and thank them for their help in bringing these to you. So the first question we've got, if you're looking at starting your own business, is why? What is your reasoning? And do you have an idea to fill a niche or meet a need in your community? If you do, that's great. We can help you with that, or the following steps may help you proceed along that line. However, if it's just to make a lifestyle change, you feel like you'd be better off being your own boss, but you don't know quite what to do, then I would have some additional questions for you. Things to look at is, what are you good at? Are you at woodworking or metalworking? Do you have a skill that's you've developed that can be marketed in some way? What are your experiences? What do you enjoy doing? And can you make a living at that? And so some of the steps we're going to talk about today will help you answer some of these questions. The most important thing is, what do you enjoy doing? I would recommend not starting a business in an area that you don't like. If you don't find joy in your job, then the job is going to be a job. But if you find joy in what you're doing, it becomes more than a job at that point, and you can be a lot more successful. And final question is, as you start a business of your own, are you prepared to be the chief cook and bottle washer? Usually, when you start a business, you have to do everything. You are the marketing expert. You are the web design expert. You are the person doing the phone calls. You are the person doing the janitorial work. You have to be prepared to do a lot of things in business until your business has grown large enough that you can afford to hire someone to do those things for you. So keep in mind. Now, the first step in preparing to start your business is looking at the legal requirements that you have. Do you need a special license? Are you going to need to have special permitting? Good place to start is your city council. For example, I've got on here, if you want to start a business, a barber shop or a hair salon business, you do have to get a license from the state of Wyoming in order to open that. You just can't start cutting people's hairs on a commercial basis. If you want to start a restaurant, you have to make sure that the restaurant, the building passes fire code. So you have to deal with the state fire marshal's office. You have to make sure it passes health inspections. So you have to contact the Department of Agriculture and have them come and inspect and make sure everything is up to code. There is an individual that can help you with this research. His name is Will Harden. His email is will.harden@yo.gov. And so he's with the state, and Will used to be with a SCORE representative in the state. He is new to the job, so he can't off the top of his head answer all those questions, but he can find the answers for you. And he's a good person in contact with. The next thing to consider is what type of legal structure do you want your business to be? And I've got 4 listed: a sole proprietorship, a partnership, a limited liability company, or a corporation. Usually, most people start out as a sole proprietor. What that means is you should have a separate business account to run all your business income and expenses through, but for tax purposes, you just report that on your personal income tax as a Schedule C for reporting purposes. Now, if you are going in business with another person, that is a partnership. So then it creates a different tax situation. You would report things still a little bit differently. Both of you then are liable. A limited liability company is similar to a sole proprietorship, but it creates some barriers between you and the public if something would happen and somebody would sue your business. And so it's a protective. As you grow, you may want to consider the limited liability company. And then the final step is a corporation. There are 2 types of corporations. There are S corps and C corps. Both of them report taxes differently to the IRS. It gets a little complicated. Usually, you do not go to the part of a corporation until you're wanting to raise capital, and selling shares of stock is a way of doing that. So I'm not going to deal with corporations. Most common ones are sole proprietorship and limited liability companies. The Secretary of State's office can explain those a little bit better to you. I would, though, visit with your accountant or an attorney. They can help you decide which structure is the best for you. The third step in starting a business is to write a business plan. Why do you want to do that? Well, first of all, it develops a game plan. It gives you some structure to follow up on. If you're starting a business, you're 2.5 times more likely to get into business once you write the business plan. It helps you see what determine what the barriers are and how to get around those barriers. It helps you see things as they really are. It helps confirm the math on whether the business is viable or not, whether it will work and provide you a living. And it can help you identify pitfalls in the process. So it is a process. It does take some time. It takes some research, but it is very helpful. Part of writing the business plan is understanding who your customers are. What people group are you trying to reach specifically? It helps you know who your competitors are. It helps you get organized. It'll hold you accountable. It'll help you establish benchmarks as you go forward. By this date, I want to have this completed. By this date, I want to have this done. And a business plan helps you get money, and that's sometimes the most important question. So again, it answers the following questions. What products or services are you selling specifically? You spell that out. Who is involved in the business? Who will be your customer? How will you market your product or service? Where is your market? Is it going to be local? Is it going to be statewide, regional, national, or even international? As you are answering some of these questions, you may not know who your customer is or where your customer is. And there is an organization here in the state that can help you with that. The Market Research Center is a state-sponsored entity. Their email is mrc@uwyo.edu, and they can pull research for you from different databases, whether it be for your city, for your county, for the state, for the Rocky Mountain region. You tell them what you would like to know. They will pull that information and give it to you in a format that will help you answer the questions. Who is my customer? How's the best way to market to them? And where does that market need to be? Some additional things to think about in writing your business plan. These are also questions you would answer. What kind of insurance will you need? A commercial policy is usually required for a business or is a good idea, but is there special insurance? Are you going to have a vehicle that's for the business purpose? Then you might need a commercial auto policy. There might be a special liability policy that you'll have to take out. Your insurance agent can answer these questions for you. What is the location? Do you have a place to operate from? Will it be out of your home? Are you turning a hobby into a full-time business? Or are you going to need to find a separate storefront or a warehouse or an actual business property? If you're going to operate out of your home, are there zoning issues? For example, some areas, if you're wanting to open a home-based childcare business, there may be some neighborhoods that do not allow that. And if you have more than so many kids, then you are required to obtain a license. So check with your city council or an attorney. They can answer these questions, help answer these questions. Who is going to be your management team? Now, a lot of times it's just you, but you're going to need a support team. You may need an accountant to help you with your taxes. You may need an attorney to help you with legal issues. You may want to find someone that's in the business that can be a mentor to you and help you grow your business or face issues, answer questions. So that is your support team. Bookkeeper and accountant, maybe a marketing and individual attorney, and I didn't have, well, I do have accountants. So these are people that are going to help you out on specific issues. We do have a webinar on writing a business plan uh, on the YouTube channel. So if you would like more information or more detail, you can view that. We are also here to help walk you through the process. We have some templates that we can provide to you to answer that ask those questions and walk you through the steps. But again, that current webinar is YouTube channel and then type in Wyoming Women's Business Center. We are going to create a new webinar later this year, probably in June, on how to write a good business plan. So we will be updating that in the future. Step 4 in beginning your business is putting together financial projections. What is it going to cost to start the business, to get it up and running? What do you need to buy or pay for up front? If you're going to open in a facility outside of your home, you're going to have a rent deposit and a first month rent. You'll have utilities deposits. You may have to buy some equipment or a cash register or a software program to handle your finances like QuickBooks or Quicken. Uh, Identify all of those costs, do some research to find out what they are, and make a list. What is it going to cost you to produce your product or provide your service? If you're making something, what is your cost of production? Include in that, what is your time worth as you're making this product? Providing a service, what is it costing you to do that? You can actually factor in your monthly cell phone bills or phone bills, your rent. You should know what it's costing you so that you know how to price your product. The most important thing is making sure you know what your break even is. Therefore, you can then price for a profit and pay yourself rather than just giving your services away. There is a pretty detailed listing here of financial projections that you can put together. If you're capable or have help, I would recommend doing all of these. They're not all absolutely necessary though, but you should do a start of business balance sheet. That's a financial statement. What does the business have for assets? And does the business have any debt going into startup? And then the difference between the assets and the debt is your net worth. So that's the equity you're putting into it. What is that? Anybody you're asking to finance will ask that question. We talked about startup cost projections. You should do a monthly sales projection for the first year. How many widgets are you going to sell each month? Typically, they start out small the first month because you haven't done a lot of marketing. As word gets out, these would increase, but it's the number of products, the number of customer contacts you're billing for, how many per month for the first year, and what will your price be in charging that. Cost of goods or services projections. You need to know what it's costing you. And then the two of those can help you put together a monthly cash flow projection for the first 12 months. You'll need to know what your anticipated income is, what your anticipated expenses is month by month, to see if there's any months when you might run short and need some additional capital or some additional credit. And once you've done the balance sheet or the cash flow projection, that can help you put together a projected balance sheet at year end. Most lenders also like to see cash flow projections for year 2 and year 3, which shows what your anticipated growth is going to be. How many more customers will you pick up? How many more sales will you have? Years 2 and 3 usually are just annual totals, but they are arrived at by doing the monthly cash flow for the first 12 months and then building on that. And then another question that you need to ask is, how will you support yourself while the business is developing? Do you have a means of paying your personal household expenses while the business is growing and until the business reaches a point that it can start paying you a wage and sustain your lifestyle? So that is something to think about. What is the time frame you're looking at, and how am I going to cover things during that time? Once you have all that put together, the next thing is to go find financing if you need it. Things that you would need to take to a lender are your personal tax returns for the last 2 to 3 years. And if you're already in business but just need some additional financing to expand, they're going to ask for your business tax returns for that same period. They will want to see the business plan that you've spent so much time writing and thinking about. They'll want to see those financial projections. And we can help you with that. This is our website, wyomingwomen.org. There's information on there, contact information for all of our business counselors that we can help you answer those questions and put all of that stuff together. If you're looking at getting investors involved rather than borrowing from a lender, they're going to want to see that business plan. They're going to want to see those financial projections as well. So whether it's private financing or commercial financing, these are two things that are essential in order to get money. And with that, that's a quick run through, but are there any specific questions that you might have? And if so, you can raise your hand and we can unmute you, and then you can ask that question direct if you'd like.
Waldo, this is Christine. Can you talk a little bit about the difference between getting bank financing and getting investor money?
Sure. Bank financing is where you go to the credit union or the bank and actually take out a loan. It can be a couple of different ways. You may get an auto loan is the best example, a term loan that you pay back in monthly installments over a period of time. Usually that type of loan is used for buying equipment or for buying maybe real estate, doing improvements to real estate to help you get started in your storefront, or maybe doing some remodeling to your home so that you can do the business at home. The other type of bank loan is a line of credit. That is a revolving loan. You borrow the money as you need it, but it doesn't have any set repayment. And so as you have cash build up, you can pay it down back towards zero to help save some interest. And then if you needed to borrow it again later for new expenses, you can take out another draw or another advance. They are more used for like purchasing inventory, short-term needs, so that you only use the money when you have a need and then you pay it back as soon as possible. The bank then usually requires some collateral, so you have to pledge something to them to secure the loan. But it's a good place to start. Venture capital or investment capital is a little bit different. In that case, you have to find someone with money that is willing to take a risk on your entity, on your business. They invest the money up front so that you can purchase what you need to. And it can vary. They may do like a bank and just say, I want a certain payment back on a monthly basis over so many years. Or they could say, I want a percentage interest in your business and I want a rate of return. So, say you borrow $100,000 from them, they may say, I want at least $5,000 a year back from you in the form of dividends, or that's a return on their investment. And so part of that is negotiating with them what percentage return they want. Usually when you finance that direction or that way, they want a percent of ownership too. So then they have a say in how the business is operated and what direction it goes. That's not always ideal, and so you have to be aware of that up front if you use that type of financing. I will say that the Wyoming Women's Business Center is an SBA approved intermediary lender, which means we can do microloans for small businesses up to a maximum of $50,000 if you're unable to obtain financing from a bank. So once you put all this stuff together, if you go to the bank and make application for a loan and they say, no, you haven't been in business long enough, or no, you don't have enough collateral, you can apply with us and we could take a look at and see if it's possible for us to loan you the money. And ours is on a fixed term repayment over a number of years.
Okay, great. I've got one more question coming in, and it's about capitalization. So they're saying essentially they went to a bank, for a loan to start their business, and according to the business plan, the banker said they were undercapitalized. Okay. What does that mean?
Undercapitalized means the bank is saying you're not putting enough money of your own into the business to start with. The best example I can tell you is you're wanting to buy a truck to become an over-the-road trucker, and it's going to cost you $25,000 to buy this truck, and you only have $3,000 that you can put into it, but the bank requires $5,000 as a down payment. So in that case, you would be undercapitalized by $2,000. That's a simple example. But what they're saying is, we want to see you put more money into it up front to reduce the amount of risk the bank has should the business not perform as well as expected.
Okay. And then there's a question about forming a partnership or an LLC with multiple parties. And the question is, let me see if I can summarize here. So essentially, they've got three people that want to go into business with each other. They know that they can split the business up into equal parts, and it's been recommended that they write some kind of operating agreement.
Absolutely.
How is the operating? So this is essentially the question. What is the difference between the operating agreement and just forming the legal entity of the partnership or the LLC?
Okay, forming the partnership or the LLC is just a matter of filing the paperwork with the Secretary of State's office. And that just puts on public notice that your business is out there. But anytime you're dealing with partners or family members as part of it, there is a potential for conflict down the road. You may be the best friends now and get along just great, but down the road, one person may begin to feel I'm doing a majority of the work, I'm not being compensated for the extra that I'm doing, and I'm not happy about it. So the operating agreement uh, spells out what is expected from each partner, what their contribution is going to be, what their uh, payback is going to be, what their jobs will be. This is a document that you should get an attorney to help you with, but it is very, very important. Um, I know an example of a business that two gentlemen went in and started. Uh, Things were working fine, and then one partner basically just quit doing his job, from what I've been told. And but he thought he was doing more than the other, and asked for more compensation or more salary. And it was a big battle. The second partner finally had to buy him out. It was a long process. It was uncomfortable. So think of an operating agreement as a prenuptial. It specifies prior to going into the wedding what will be the outcome if you find out you can't work together long term. And I would not start a partnership without one.
Okay, terrific. And it looks like we've got a question from Nancy. So Nancy, I'm going to go ahead and unmute you and go ahead and ask your question.
Hello.
Hello, yes, go ahead, Nancy.
Hi, Nancy.
Hi. I've got a friend that's doing a nonprofit charity work business. What would that be in comparison to putting together a regular business plan?
A nonprofit business plan wouldn't really be any different than a for-profit business. You'd still go through the same steps, but the financial projections would be a little bit different. In that case, you're not really looking to make a profit. You're just looking to cover all of your expenses. You still need to identify what those expenses are, what the income is going to be to cover them, and what your funding source is going to be. Most nonprofits are also tax exempt, and therefore people investing in them or contributing to them can use their contributions as tax deductibles when they itemize. So that needs to be spelled out a little bit differently in the business plan. It's just a different section that you would write. And some of the stuff covered in the business plan wouldn't necessarily apply in that case.
Okay. Thank you.
You're welcome.
Okay, that's all I've got for now, Waldo.
All right. Well, I want to thank everyone for attending. If you could, before you click out today, if you have been a part of our noon webinars, normally we've offered these at noon, from noon to 1 over the lunch hour. But if you've participated in one of those and then you're participating tonight, please make a comment in the chat section for us what your preference is. This is the first time we've done an evening webinar, and we'd like to have some input if this is a more preferable time for everyone, or if noon works better. I do want to reiterate that this webinar has been recorded, and so the recording will be posted to our YouTube channel sometime tomorrow and can be viewed again. Again, on the screen is my contact information. If you'd like a copy of these slides or have additional questions you think of, you can sure contact me either by email or by phone. We do offer business counseling, so if you're looking at starting a business and you need help with the business plan or the projections, you can contact us and we can help walk you through that process. Our next webinar is scheduled for February 8th. In that, we will be discussing how to build a marketing plan, and that will be from noon to 1 on the 8th. So February 8th is a Friday. No, I'm looking at, it's a Thursday. So it's basically 2 weeks from today. And we want to thank you all for participating. It looks like we may have a few more questions.
So I just had a response for the time of the webinar.
All right. So again, thank you for joining us, and we hope you all have a good evening. And if as you leave the program, there may be a survey pop up. We ask that you please answer those questions. That gives us feedback and helps us report to our funding partners the effectiveness of our program. So please take time to do that, and everyone have a good evening.